Hello investors, here we are going to look at JD.com versus Amazon. Two retail stocks and online ordering stocks that are very interesting to look at, so stick around. Hello investors, today we look at this side-by-side comparison of JD.com and Amazon. So obviously there's some section of their businesses that are really competing with each other, although maybe not in the same country. As you can see, this JD is mostly in China, but they could sell internationally, whereas Amazon is in the US and internationally, but also could compete in China as well. So yeah, I mean, stores, online sales, and so on. So what we're going to do today is really just by looking at the data, without reading any news or without reading any SEC filings or anything, just gather from the data what's important about those two stocks, right? What makes them really different. So let's jump to it. So you get a nice description here. Okay, we're done with the description. Let's have a look at the size. So what you do is you click on the two widgets holders. As we can see, market cap is a tenth, even less than that, a tenth of Amazon. Amazon is 1.6 trillion. This is 116 billion. So different size here, right there. The other thing is, interestingly enough, institutions are actually dumping Amazon stock lately, or at least in the last quarter based on the 13Fs, whereas they're buying JD, right? The aggressive funds, hedge funds, are buying JD aggressively, I would say, whereas these guys are selling Amazon, right? The growth funds are kind of plateauing on JD and selling Amazon. So maybe they switch one for the other. Right. So first thing to notice here is that institutional score is negative -3 and positive for JD. So I'll say a +1 for JD there, which is interesting. Now what we do is we can go into the EPSM cycle to see where they're both in the cycles. So they're both in the EPSMomentum quadrant, having been there. Amazon dropped into the growth trap and then rallied back in with very good earning momentum and revision score. Whereas JD has been down there, went all the way down with no momentum and now back into momentum territory. Right. So when we look at their respective charts, they're both EM greater than 26, 28. So they're both in good earning momentum. Both earning and sales are very high. You can see here 97 and 40% for both EPS and sales, 52 and 30 for both EPS and sales. So truly amazing growth. And that's it. So go back in history. EM was 26 here and then in the single digits and then going up. On JD, it was 22 here, 11 minus say 26. So a little choppy, but really single digit for a while, which is very good, and EM22, so a good signal. Actually, if we look at the actual matrix, which is again one of the most important piece here, is earning and sales. So here, let's start with earnings. 52% growth on earnings from 0.33 to 0.5, 97% growth, which is truly breathtaking here. Why? Because of the sheer size of the company. Growing 100% in EPS is amazing. Acceleration here, positive acceleration here. This is really like COVID stuff. Why? Because people are ordering online now rather than in stores. So obviously you get a nice rally for both in EPS and acceleration. The surprise is positive. EM also here. Let's have a look at sales. So sales very high up, 17, 20, 24, 21, 26, 40%. Here 18, 24, 25, 14, 30%. So pretty similar. Maybe a little bit more with Amazon because they have other businesses obviously than JD does not have. Great acceleration as well. Very similar growth here, which is interesting. Let's go into the revision. So the revision, we'll click into the revisions of EPS. JD published in August 17. That would be about here. Since then, it rallied 100% from 261 to 350, actually for 351 to 7. So high up here, really high rally after the earnings. Amazon published on the 30th, 2 in revision score, up 889% all the way here. So very high revision for both JD and Amazon. Hence the rally in the stocks lately since earnings. So very, very, very good revision. So that's very, very interesting. Now let's go into valuation. Is it overvalued? Is it undervalued? Let's have a look at this. Let's have a look at this. So first thing that jumped to mind, here is P is 77. Here on Amazon we're 150, so twice that amount. The cashback P, which is pretty much when you get your money back, if you actually buy the stock at $76, how many years will it take you to get you $76 back? Discounting or taking all the cash flows or EPS that you're getting on year 1, 2, 3, 5, and all the way to 30. It'll take you 15 years. Whereas Amazon will take you 33 years. So to us, P of 33, P of 15. So that's interesting. The interesting thing is 46% growth and 30 for Amazon. So Amazon is really growing, which is huge for their size to grow still 30%. Whereas JD is still somewhat of a small company, and that growth of almost 45 to 50% is truly amazing. So I'll say, it looks like more growth, cheaper PE, extremely high growth, but a little less than JD, and somewhat still affordable PE. Not, don't look at the actual Wall Street PE or the forward PE. It doesn't tell you the same story at all. So that's really interesting. Let's go into the drift. So the drift, there you go. They're both into drift A and B. So again, what is the drift? Is we compare those two numbers, the overnight change during earning and the during the day change of the first day. If they're both positive, you're in A. If one is positive, the other one is negative, you're in B. If negative, positive, you're in C. If they're both negative, you're in D. So they're both in A and B. Statistically, of a 7 quarter over 20, JD went up 22%. Amazon, statistically, 9 out of 20 went up 13%. So both going up very strongly. And let's have a look at where the stock is. So JD is actually following the high mark, is on the max mark here, max average. So maybe retracing a little bit and then rallying to $84. It's currently at 76. Whereas Amazon is following the mean here, tried to touch the max, went into a little correction here, maybe retracing to the min, but going to 3,400, maybe 4,000 on the high side. So maybe overstretch here on JD, whereas here is understretch for Amazon. But it's a drift B, so reminder, the reason for drift B is that institutions are not buying the stock anymore. The during the day change was negative on the day of earnings, whereas it was extremely positive here. And guess what? This actually illustrates what the holder widget told us, which is very strong buying from funds on JD, strong selling of funds on Amazon, thinking that Amazon is a little bit overvalued. So again, we see this in the drift, so that's really interesting. Let's see if the model picked it up actually. So the model, the journal return, we get a nice return of 41% of JD. The model bought it in 2017 at $39, which is compared to $72 today, which is truly amazing. Then it both sold, and made $4,000 out of a $10,000 investment. On the Amazon side, what do we have here? Amazon was bought and sold, but $1,500, like $900, and $1,500, and only a 25% performance. If we look at the fixed stop strategy, so the fixed stop, yeah, let me just uncheck that. Fixed stop strategy, it was a 90% increase. So the good thing, you actually get kicked out of the stock here. You protect your investment. The stock goes down, 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 and then you rally again and capture the growth here. So it's actually worked pretty well, 120% growth. Whereas on Amazon, it's been truly awesome. Capturing Amazon at $1,000 ish, and riding it all the way for a 216% increase. So really worked well here. On the adaptive stop, again, different picture. 4% growth, protecting the adaptive stop is based on the EM dropping under 20, and that kicks you out of the stock. So protecting you here. All right, less performance here clearly, but the fixed stop is really amazing, and even the trailing is a good one. So good stuff on the two stocks. So that is in 3 minutes how we look at a stock on EPSMomentum.com. This is a good way to start your research. Then you read about news. Then you go into the SEC filings and the conference calls. But you know what? So far, it looks like two very comparable stocks, except minus a few things like AWS, obviously on Amazon, that JD does not have. But they're both in rally mode and good earning momentum. Maybe Amazon has some institutional sellers. You see the timing momentum going down here as well on both. And they are underperforming the market, or about to underperform the market. So again, I hope you find this useful. And you can find all this at EPSMomentum.com. And that's it for me. Thank you very much for your time.